welcome back to another session of the Let's Get Technical series with me, Kavita Agrawal, the founder of EXP-Invest. Today we are here to talk about how to prepare for market corrections. Before we get into that discussion, I want to first address the query that we've received from our audience member. And this makes my day to open the session with a query about a genuinely very high quality question. So Sandeep ji is asking, ma'am, why do you use RSI 25 instead of 14? Because 14 is discovered by the inventors. So the RSI index, that is the relative strength index, it was invented by J. Wallace Wilder. He judged was that with 14 period, the RSI gives the best results. But you have to understand that he used the RSI to firstly analyze the US markets. Secondly, he did a very different kind of trading that I did. So while the formula with which the RSI is very intuitive, is very apt for what we want to do, that is judge the price of the stock or the underlying and judge it against its own previous price momentum, right? So the formula is very good for that. But the period of 14, there is a problem with that. What is the problem? Number one, when J. Wallace Wilder used the period of 14, he was firstly applying it on the US market. Secondly, for a period of trading, which is not swing trading like the one that we do. He was either using it for very short-term trading or very long-term trading. That being the first point. So when I've been using RSI since many years, and at one point of time, I did a very detailed research into why this period of 14, why not 15, why not 400, why 14? And I did a lot of research and I didn't get an answer. What J. Wallace Wilder had done was he back tested with a lot of different periods when he discovered the indicator, and then he found the best results for him was the 14 period. And while I was very happy with the indicators formulation, I was not happy with the results which it was giving me. So it took me 3 months of relentless back testing with a lot of different time frames, different time periods on many different time frames. It took me down a rabbit hole of lot of calculations, lot of correlations between different time frames, testing different time periods and everything. And then finally I realized that between the period of 20 and 25 also, the period of 25 was giving me the most logical results with respect to the kind of trading that I wanted to do. So I am a swing trader. So for swing trading, the period of 25 when applied on 3-minute, 15-minute and 75-minute time frame, it has given me the best results. Moreover, it allows me to enact on something bigger, which is the correlation between my different time frames. So if you see the time frames that I use, starting from 3-minute, 15-minute, 75-minute, daily, weekly, monthly, they are all a factor of 4 or 5. As you go to weekly and monthly, it becomes a factor of 4. But 3, 15, 75 and daily are factors of 5 of each other, which means 3 into 5 is 15-minute. 15 into 5 is 75-minute. 75 into 5 becomes one daily candle. Daily into 5 becomes one weekly candle. And then weekly into 4 becomes one monthly candle. So all factors of 5. Now let's move on with this session. So today I wanted to talk to you about a very important topic, and that is how to prepare for market correction. In the past sessions, time and again, I have spoken about my trade tracker. I have spoken about my dashboards, and all of these dashboards and trackers that I use play a very important part in making sure that I'm at the top of my game. I am prepared for the correction. So what are the elements that we need to take care of when preparing for our market correction to come? Let's get into that. And in order to help you better, what I will do is I'm going to start making notes. And see, these are the notes which I expect you to make. But since a lot of us don't, I also obviously wouldn't make notes if I was attending a webinar. So I will be making the notes on your behalf. And after this session, I will be sharing these notes on my Telegram channel. So you can join my Telegram. The link is already dropped in the comment for you to join if you want access to these notes. How to prepare for stock market correction. Number one. So the first and the most important item when it comes to being prepared for the stock market correction is setting your stop loss on active positions. Whether you properly set the stop loss on the active position or whether you have updated the stop loss or not, how will you get to know this? This you will get to know by using your trade tracker. So I will give you an example with this. I'm going to show you my trade tracker right now. It has a lot of columns. The most important column, so the stock name column has been hidden because it's a little bit of violations on my part if I share stock names, because I don't want to make any recommendations here. So what I do is whenever I set a stop loss on my trading account, I always make sure that I make the entry here. So this is like a very simple tracker. It simply has a column to calculate how much I should allocate in a stock, quantity, cost, stop loss, remarks, percentage of the stop loss that it is away from, the last traded price and the sold date. So whenever I sell a stock, I freeze this amount. Like you can see, this is connected to another cell from which the live prices comes. And if it is sold, then I freeze the price. Now, what you will see is that here I have the stop losses. So every day after market, what I do is I simply sort this from A to Z. So what this does is whatever is the biggest stop loss, it will tell me about the level. Now, all I need to do is I need to go back to my Zerodha trading account and make sure that I update these stop losses. But how do I know which level to update to? So for that, I will go on my chart. I will do my analysis. and I will update the stop loss. Now, with respect to my clients, so I have a paid recommendation service where I give people stock recommendations with respect to what stock to buy, what stock to sell. For example, in this, these are the recommendations. The stock names are obviously hidden here, but you will see in this also every time there is a stop loss update. Like for example, this stock today, stock code 15280. Today there was a breakout and the stop loss became really big. So this stock has already moved up 10 days in just 13 days since I gave the recommendation on 11 January. Today I gave a stop loss revision to my members that please revise your stop loss to 1650. So how do I do that? I do that on the basis of analysis on my charts, because I'm a technical analyst. I've been doing this since the past 12 years. So I know what prices are important, what levels are important, and how to set stop losses properly on the basis of important price levels, green zone, support resistance zones, trend lines, moving average analysis, momentum analysis, combination of all those things. When you have an existing portfolio, first very important thing for you to do is to know your exit strategy. Know your exit strategy means knowing your initial stop loss and knowing the potential target for which you're holding the stock. As your stock starts to move, especially if it starts to move up, you need to revise your stop loss. Why? Because let's take the example of the stock HFCL. So suppose I entered the stock here, right at the dip. Now, when I entered the stock here and the stock went up to here, 14% upside. Now, would I be okay with losing all that 14%? No. What I would do is I would set my stop loss at the level of nearly 81 rupees. So I entered the stock, and now when the stock went up, I revised my stop loss 80 rupees. So now the stock went up here. It came very close to my stop loss, did not trigger it, and then today it went up. Between this journey, what I will do is once the stock crosses my resistance at 93, I will look out for the next best support level, revise my stop loss again, and let it achieve my target. Today, my target on HFCL, for instance, got achieved. The stock automatically got exited. Why did I let the stock exit? I saw a small negative divergence on the 15-minute time frame, and I also had an alert set a little bit lower than my target. So when I saw that there is a small negative divergence and my target is very close, I was like, let the target get achieved, let the stock get exited. I will re-enter the stock if the need be. So this is knowing your exit strategy. How do you prepare for stock market correction? Firstly, prepare for the stock market correction before the correction happens. Prepare for it beforehand, which basically means know your exit strategy. See, a lot of people I have seen in the market will focus more on what their potential target should be, where they should be able to book profits. But that is not the right mindset in the market. You need to focus more on protecting your portfolio from loss. When I say portfolio, I am including both your capital and your unrealized profits. Because remember, once it has been accrued, even if it's not booked, once the profit is accrued in your portfolio, it is part of your capital. You have to treat it like that. So in order to protect your unrealized profit, you need to trail your stop loss. How you prepare for stock market correction is when you enter a stock, know your exit strategy. You don't have to be a technical analyst. Just like you don't have to be a carpenter to have furniture in your house, same way you don't have to be a technical analyst to know the exit strategy for your portfolio. There are services. This is the age of technology. You can take consultation services, or you can pay a research analyst, a retainer, and have them be available for you. Like for example, I have multiple clients who pay me like 1200 for each session, and they've all pre-booked 10 sessions in advance. And when you book 10 sessions, you get 10% additional discount. So because they have pre-booked so many sessions in advance, what they do is whenever they need any information on a stock, they just send me a message. I reply to them. So that's called a trainer relationship that you can have with a research analyst. So instead of you sitting with charts that you don't understand, trying to read a language which you don't know, that is chart analysis, it's better to take the help of an expert who does. So know your exit strategy. How? Either self-analysis or outsourced analysis. Next, when the stock moves, when the stock starts moving, trail the stop loss with the help of analysis. When a stock starts moving, you need to trail your stop losses. Now, the thing about trailing stop loss is that some people will use a very arbitrary rule of thumb. Like I will set a 3% stop loss. I will set the stop loss on the basis of the previous low. The problem is that this doesn't work all the time, and I'll show you why. Let's go back to the charts and let's take a practical example for this. For example, we have the stock of HFCL. The two things that you need to take care of when identifying the right stop loss. The first thing that you need to identify is the stock's tendency, or what I call the personality, which basically means how much is the stock capable of moving in every swing that it gives. So for example, if you were to just very quickly measure the swings of this stock, right, that is open in front of us, HFCL. So the stock went up 18% in 10 days. It came down 10% in 14 days. Then it went up 20% in 15 days. Then it came down 10% in 20 days. It again went up 11% in 3 days. Then it came down 22% in 26 days. So if someone was swing trading the stock, the range would actually have been this one. So basically 62 days, 25% in 62 days. Another opportunity, if you see, the one that I captured for my clients in the portfolio management service is this: 72% upside in 90 days. Now, within this, swing, if you see, it went up 15% in 20 days, then it came down 7%. Then it again went up 26%, again came down 12%. Again it went up 19%, again it came down 8%. Again it went up 16%, it came down 13%, again it went up 30%. Now, for a stock that moves like this, if you use a rule of thumb of 3% trailing stop loss, nothing is going to work for you. So when you set the stop loss, you have to make sure that you're taking into consideration the stock's own tendency of giving swings. And then the second thing that you need to take care of is which stage of uptrend is the stock in. Why? Because depending on whether the stock is in the beginning stage of the uptrend where the momentum is very weak. So just like when a child is trying to learn how to walk, you will see they try to get up. A lot of times they fall, they try to stand, they fall. Then slowly they learn how to stand, they learn how to walk, then they learn how to run. Same thing happens with a stock. When a stock is coming out of a bear trend, out of a bottom, it's like a baby. It'll try to stand but keep falling back to the support. Try to stand, keep falling back to the support. Then slowly it'll start to walk. Then it'll smaller supports, then it comes into momentum and then it starts to run really fast. During each of these different stages, your stop loss strategy will also vary. Naturally, in the beginning stage, when the stock is coming out of the bottom, your stop loss is going to be a lot bigger. You'll have to give a lot more breathing space to the stock so that you don't get caught in whiplash. But at the same time, you also need to keep the stop loss such that your risk reward ratio does not get compromised. So which stage of the uptrend the stock is in, it can be in the bottom reversal stage or just learning to walk stage or absolutely full-blown momentum, but then you can keep very tight stop losses. Once the stock reaches the full-blown momentum, like when it starts running up, then your rule of thumb can still work out, but not in the first early stages of a momentum. So these are the two things that you need to identify. Once you've identified, you need to go ahead with setting the stop loss. So when the stock starts moving, know your exit strategy. Then what you need to do is set your stop loss on the active position. All you need is a system for it. So this is basically a trade tracker that I give my members, and in this there is a field where everybody that joins my Trade Together program are required to enter the tick mark when they set up their stop loss. Then you use a trade tracker and see, this trade tracker is not very hard to make. It's very simple. Just add the buy date, quantity, price, stop loss field, stock name, buy date, sell date, buy price, sell price. That's it. If you use Google Sheet, then you can use the Google formula, Google Finance formula to pull in live prices into this. So this tracker itself is enough to tell you where you need to revise your stop loss. Then you just go back to the charts, take a look at it and revise it. Another mechanism that you can use is set price alerts. So when a price alert gets triggered, you know that your stock has moved significantly and go ahead and do some analysis, revise your stop loss again. Using the trade tracker is a very effective tool because sometimes what we try to do is we don't use a trade tracker and we think we'll go to the GTT, we'll do some filters there and we'll update whatever needs to be updated. But see, I learned through practice that's not a practical way of working, and you will also learn the same. You can either learn it through practice or you can learn from my experience and deploy that to become a better trader yourself. So when you are on top of this, first of all, this is a habit building exercise. So you need to get into the habit of maintaining your trade tracker, and you need to develop the habit of making sure that you never hold an active position without knowing the proper exit strategy for it. It takes a lot of maneuvering. It's the same as building the habit of fitness. But once you build the habit, what will happen? So what happened with me when this market crash happened? First of all, on the 18th and the 19th. So now let's go back to the chart of Nifty. So I have been very bullish on the market. If you've been joining my market outlook series on every Friday, you know that my target for Nifty was initially 22,000. And even when 22,000 got breached, I was very skeptical of giving the next target because I noticed that breakout above 22,000 did not happen with strong volumes. So on the date of 15th of January is when we broke out above the level of 22,000, and 16th January is when we actually topped out. So 16th January, something very interesting happened, that the 22,000 level got briefly tested by the market. And then on the 7th of January is when the market correction truly started. That day also I did a live session that is just exactly 1 week ago. So you can go to 1 week ago's video. You can see that I said this was the beginning of the new correction. So what happened on the 16th, 17th and the 18th was, in the Trade Together program, in my client portfolios and in my own portfolios that I manage for my family, a lot of stop losses got triggered. What I have seen is that when I stay prepared with my exit strategy in place, with my stop losses in place, even if I don't know what is happening in the market, my portfolio will automatically go into self-preservation mode. This is what is being prepared for the market correction, that when the correction happens, before you realize that this is the beginning of a market correction, because see, like I said, on the end of 17th of January is when I realized that this was the beginning of a market correction, but my stop losses started triggering from the 16th of January itself. Why? Because for every single stock in my portfolio, I make sure my stop loss is updated. So even if the broad market index falls late, there is a good possibility that the stocks in your portfolio start to fall earlier. Let me again take an example to explain this. On the of January, 17th of January and the 18th of January, across my portfolios, because I had a lot of unrealized profits. I was able to book a sum of 1,36,308 only from trailing stop losses. Why? Because I had so much unrealized profit. If I hadn't set the stop losses, this entire sum of money would have turned to unrealized losses or would have just evaporated in the market. ABC Capital. So I had a position in this stock and I saw the charts and I saw that there was negative divergence here. So I set a small target and I let the stock get exited. Now, because I was prepared for a potential market correction, or I was prepared on a stock by stock basis, I was able to protect my capital from a 10% decline in a matter of 7 days on this specific stock holding. There are lots of examples like this in my portfolio, like HDFC First Bank, Atul, Tata Elxsi. Because I had stop losses set in advance there, I was able to protect my capital. In fact, I was able to book massive profits on this. This is what you need to do even for your beginner level portfolio. You need to make sure that you know the exit strategy, you know your stop losses, you're taking the help of an analyst if you don't know how to analyze the stock. In order to make yourself more efficient in the process of setting stop loss on the active positions, I recommend you use your trade tracker and you set price alerts. You can set price alerts in your Zerodha. You can also set your price alerts on your trading view charts. Focus on building a habit. So what do I mean by building a habit? It means that whether or not you have a need to do this, you have to want to do it. What I tell my members of the Trade Together program is make sure that you're spending at least 15 minutes of time before you go to bed every night to see whether your stop losses on every position has been updated on the basis of the updates that I give. So I give them access to an active call database where they can see all the recommendations in one place. Let's address one pitfall of using stop losses. A lot of people have this complaint, and this is also the reality, that sometimes stop loss gets triggered and then the stock goes up. Yet on a larger scale, the art and science of using stop loss regularly yields a much better return for our overall portfolio when compounded over the long time. Because see, it might be in 2 out of 10 stocks that your stop loss and went up. But in 8 out of 10 trades, it is going to help you preserve your unrealized losses and your capital. The problem is our psychology, because we have a tendency of remembering things that affected us negatively more than those things that affected us positively. We have a tendency of remembering the times when the stop loss hurt us rather than benefit us. As a result of that, what do? Because our memory is biased, because we have a tendency of selective recollection, we will stop using stop loss entirely. And just today I spoke to a client and he told me that he does not set stop loss because he monitors the positions. The problem with that is when you need the stop loss the most, that is when the market corrects. When it corrects suddenly, when it corrects without you expecting the correction, it's going to happen so fast that you will not get an opportunity to react. Because remember, when market correction happens, it mostly happens across a majority of the stocks at one point of time. If you keep manual exit as your defense mechanism, you will not be able to defend your portfolio. You will not be able to defend your capital. The crux of being prepared for stock market correction is to be prepared before the correction comes. You need to grow bigger than those pitfalls. Next point in staying prepared for the stock market correction is when the stop loss is triggered, don't re-enter the stock immediately. How do you do this? It is possible that you have a lot of conviction in a stock. It is possible that the stock might genuinely have positive potential. But if you don't know how to analyze, why don't you again have a research analyst at a retainer and you ask them whether you should re-enter a particular stock or not? You can do it on call. You can also do it via written communication. Use WhatsApp, use Telegram, drop a message, get the response. But of course, you need to find a research analyst who gives these services. Again, you can join my Telegram channel if you're interested in working with me on this. Right? So when the stop loss triggers, don't re-enter the stock immediately without objective analysis. Now, after the stock market correction happens, stop losses get triggered. Your unrealized profits have been protected. And the best part is you have cash now. Okay. Now in this corrected market, you can look for good opportunities to purchase in this fallen market. Stocks where you have done swing trading earlier now might be ready for re-entry for a second leg of upside. And that is exactly what we've done today. Today, I have given 5 new recommendations to my members across all tiers: Esteem, Elite, Exclusive, and long-term recommendations. Today, I have given 5 new recommendations across all these tiers. Why? Because the market has fallen. How much has the market fallen since the top? Almost 1,000 points from the top. A lot of opportunities have surfaced. A lot of stocks that we had exited nearly a month back have now come back to a position where we can re-enter them for another leg of upswing. Right? So that is what we've done today. And how is this possible? Re-entering stocks or entering good stocks after correction is only possible if you have an exit strategy when the correction comes, not after the correction, when the correction comes. So you have to be prepared for the correction before it comes. So this becomes our next point, that reinvest the freed capital into new opportunities to make more money until the next market correction. So for me, it is very fair to say that it is actually when the correction starts that I make money. Because unless the correction starts, I don't let my stop losses get triggered. I don't exit my positions. I keep holding them. A lot of times also what happens that stocks which are stale, which means which are in sideways consolidation, which are just not giving any movement. If a market correction comes and if my stop loss is there, what will happen is the stop loss is going to get triggered. The stock will get out. So even if I have been holding on to it with this belief that it's going to go up, because I had an exit strategy there, now at least my capital has been freed and I can now use this capital somewhere else. On the other side, a stock might be in consolidation, sideways movement. Market correction came, but it did not fall, which means that the stock has the strength. It has good holding in it. And now after the correction, maybe it will start to move up. And this happens with me a lot, that sometimes I'm holding on to few stocks, say 3 stocks have been in consolidation, not giving any movement. When the market correction comes, 2 of them might trigger stop loss, but 1 of them at least will definitely go into a proper bull trend after the correction ends. So this market correction is actually a very important part of your strategy when you're an active trader in the market. The way to benefit from it, even if you're not a short side trader, is by being prepared for the market correction before the market correction comes. So that was what I wanted to talk to you about in today's Let's Get Technical session. Before I leave, let's take a look at some comments because there are some very high quality questions from some of the audience members. Rajneesh has asked, ma'am, how to set the 75 minutes chart. So Rajneesh ji, you can set 75-minute charts on your Zerodha account. You can, if you use TradingView like me, what you need to do is you need to hover on this little window where you set the time, and niche mein you see this input area. Here you have to enter 75 and you need to add. When you click on add, under the minutes section, you will see 75-minute will appear, and then you can click 75-minute to set the 75-minute chart. Contrary, on the other hand, you can also press the comma sign on your keyboard, and then this change interval window will open for you. Then you write 75 and you hit enter. Your 75-minute chart will get uploaded. One thing that you need to know is that this 75-minute feature is a premium feature on trading. In order to use it, you will need a premium account. You cannot set custom timeframes otherwise. Next question. So Prince is asking me, show the trade tracker one. Sure, Prince. So this is the trade tracker template which is given to all the members of the Together program. So in this, as you can see, there is a field for adding the code. That is the first column. The code is basically every stock recommendation that I give to members. It comes with a unique code. So as soon as the member enters the code here, the entire analysis gets loaded. So every day you update stop loss. Debashri, I don't update my stop losses every day. I set alerts on all my stocks. When this alert gets triggered, then I automatically know that I need to look at it and set my stop loss. Akash, so how you can join my service is very simple. This is my Trade with Kavita channel. So there is information about here. This message is there about joining my twin trading program, which is called the Trade Together program. And a lot of information is present here. There is also a booking link. So if you want to talk to me, if you want to take my consultation, you can book, or you can also talk to my team member if you want to know more about the services. So this is a very good way of connecting with me and knowing more about how I can help you out. Just need to join the Trade with Kavita Telegram channel and look it up there. Manoj is asking, just like HFCL, I am confused about what to do with other stocks in my portfolio. How can I get your guidance? There are 2 ways you can get my guidance on your existing portfolio. One is you can book a consultation session with me, and another is you can book the portfolio cleanup service. In the portfolio cleanup service, I will basically make a trade tracker like the one that I just showed you, and I will share it with you. In that, I will include all your stocks and I will give you actionable advice with respect to whether you should hold, add more, or exit the stock, what your stop loss target should be. I'll create a proper report to you and send it. And the best part is that once you get this report, I will also indicate in that same report what level you should come back to me and ask for a revised stop loss. And just via chat, we can have that updated. So you get the report made once, but then you can use that to get follow-up repeatedly in a very structured manner. So I have a system for that. Again, just join my Telegram channel and reach out to me. We'll take that forward in more details. Tanmay has a very good question. How much does correction in market impact the coming IPOs? Tanmay, as a research analyst and technical analyst, I don't invest in IPOs, and I also don't recommend members to invest in IPOs. The reason being, if you look at statistically, the IPO is not designed for a trader to succeed in. Why? Because number one, who is the person who's coming to sell you the stocks in an IPO? People like promoters and early stage investors. First of all, they know way more about a company than you do. So if they are wanting to sell, how good can a company be? Second, suppose a company is genuinely good and they are selling to genuinely raise capital for some genuinely good plans. So what is going to happen is the institutions are going to put a lot of pressure. So the retail share of this amazing IPO is going to be minuscule. As a result of which, the oversubscription is going to be massive. Not to say that oversubscription is a very good indicator of the quality of any IPO. That is one thing. Secondly, when you go to apply in these IPOs, you need to keep your capital trapped, which means you're losing on opportunity cost. You're already incurring a cost there to participate in the IPO. Okay, baad bhi, if you get the IPO, there is statistically a very low chance that you're going to make money. Something where the entire setup is not in your favor. I honestly don't believe it's a good idea for me to analyze stocks and analyze those companies and then incur opportunity cost for even an opportunity to invest in it. Absolutely everything about an IPO I feel appalling. Secondly, when the market correction comes, it does impact upcoming IPOs. Why? Because the event of the IPO is very sentimental. If the entire market is very negative, the listing gain for which a lot of retail traders invest in IPO, that can easily get wiped out. Tanmay, I hope I was able to answer your question. If you have a follow-on question, feel free to add that in the comment. Now let's take a look at some of the stock queries. Ravinder Ji is asking for GRE Cotton. Long time since I looked at this stock. I actually like this stock a lot. Somehow I think, because I think it probably fell out of my watch list for whatever reason. Oh, this is why the stock has fallen out, because it went into consolidation and I was like, let's cut it out. But clearly the stock is out of consolidation. In fact, it has started a fresh new bull trend since the 25th October and it started to go up. And it's also sustained above the 200 EMA of the daily time frame, which is great. Now you have the stock at 154 and the stock is at 156. But I think this uptrend which is unfolding, right? I think there is a lot of juice here. So I would suggest you maintain a stop loss right here at the level of 155. So basically your entry price should become your stop loss so that you don't lose capital on this one, right? Because even though GRE Cotton is showing positive, I don't think this is like a amazing company against which I would suggest you to hold even if it goes below your cost price. Actually, there are a lot of better options in the market than this specific company. So let's take a look at, I think Maverick had asked a question long back. Let's get to you, Maverick. RVNL 120. RVNL is almost at 300, right? I think RVNL is super bullish. In fact, this correction that just happened was a very good time to make fresh positions in RVNL if anybody wanted to. And you see here, this day, the stock triggered a downward, lower circuit. And then today it's recovered somewhat. For you, honestly, I would suggest you maintain a stop loss right below this lower wick at the level of 260. If you had asked me for a stop loss on the 9th or the 18th of January, I would have suggested a stop loss of 227. But because now the stock has created this wick here, I would suggest you can set your stop loss at 263. And let's also look at IRFC 94. Amazing. So again, IRFC also same logic. Just set your stop loss right below this wick at the level of 149 because 150 is an important psychological level. So at 149, you set your stop loss and you wait. Next, let's look at HUL HUL 2440. You probably bought the stock today, and I think HUL is a very weak stock right now because this decline it happened on very strong volumes. So this is more of a pullback rather than the beginning of an uptrend. I don't think this is going to sustain for a long time. I think the stock has a very strong resistance on this level of 2462 and 2444, and I really believe that the stock has a strong support here at the level of 2338 because there's the 200 EMA of the weekly time frame. And if you look at the weekly chart, right, when the stock falls so much, it has a tendency of taking support at the weekly time frame. It has done that like multiple times in the past. So I don't think this time is going to be an exception. So my suggestion to you would be to exit the stock tomorrow and wait for it to come back down around the level of 20, like early 2300s to re-enter. All right. Shelja has a question for HDFC Bank. HDFC Bank I've covered in the last multiple sessions because there's always someone asking for the analysis. I am not positive on HDFC Bank at all. I think it can give another 6-7% of decline. In fact, today it almost opened very close to my support level. But if you see the volume on this correction, again, it's been massive. So I don't think that this uptrend is going to start just yet. See, if you also look at this chart, just see how much below the level of 30 RSI came, which indicates that the momentum of the decline has been super strong with super strong volumes. So what happens usually when the momentum breaks the level of 30 is the price comes to retest this low. So here I expect this low also will get retested, and I think the level of around 1360 would be a very good price to buy HDFC Bank. So guys, if you are still with me after nearly an hour, and if you're enjoying and benefiting from what I'm sharing, before you leave the session, please give me a thumbs up and leave a kind comment. It'll make my day. And also subscribe. Don't forget to subscribe to my YouTube channel. I am also dropping the link to my YouTube channel in the comment section, because when you subscribe to the YouTube channel and hit the bell icon, then you don't constantly have to rely on my updates. You'll automatically get notified when I come live next time. Ma'am, Trade Tracker is available for monthly subscription. Yes, AKS, you can join my Trade Together program in which you will get the Trade Tracker complimentary, and that is a monthly subscription program. You can connect with my team and you can get to know more. Do you recommend Dhan, which was very good integration to TradingView? Deva, that integration is not, in my personal opinion, not going to really help you. What you should look out for in Dhan is whether it gives you stop loss facility on your positional trades. As far as I know, there is no other broker in India other than Zerodha who does that. I have heard that IIFL and Kotak Bank do give that service, but I haven't checked it out myself. And also, as far as I know, it has a very limited validity period, whereas those stop losses which you can set with the Zerodha brokerage account are valid for at least 1 year, and you can set as many as 100 GTT orders at once. So I strongly recommend anybody interested in positional swing trading or momentum trading to only use Zerodha, because firstly, their cost of trading is very low. Their user interface is very simple, very simplified, and the way they have designed their interface, copying the data from there and pasting it into different Google Sheets or Excel to do my weekly reconciliation and everything, it's just super simple. And these are such small things that we don't pay attention to, but these simplicities, at least as an active trader, it makes my life really easy. So I would strongly suggest that just go for Zerodha. Their user interface and their technology and everything is just out of this world. And trust me, I trade in cryptos, I trade in US markets, I trade in a lot of different asset classes. The simplicity and the ease of use of the Zerodha platform is absolutely unmatched. I've not really tried Dhan, so I won't say anything bad about it, but all I can say is that I use Zerodha and I'm like a huge fan of that company. Even the other services which it brings, like M Profits, like Small Case, like Picker Tape, like everything is just so top notch that it just speaks a lot for the core of the company and the management team. So Deva, I'm not aware if Dhan has that forever order feature, but I'm also not aware whether their interface and everything is great. I only know about Zerodha, so that's what I can talk about. Prince, thank you so much for your kind comment. Rishi, Angel gives GTT facility also. No, Rishi, Angel 1, I can tell you with guarantee, does not give overnight GTT facilities. It allows you to set GTT on overnight positions, but those GTTs get cancelled the moment the market closes. I was also fooled by this, and I actually lost a lot of money using Angel One because of this, because I set the GTT on my Angel One account long back, and then I thought, oh, I set the GTT, and then later I come to see the stop loss never got triggered. Why? Because the GTTs apparently were getting cancelled. So no, Angel One does not let you set overnight stop loss orders. You have to make sure that you test whether your broker gives you overnight stop loss orders or not. Just letting you set the stop loss order during the market, cancelling your order when the market closes, expecting you'll come back tomorrow morning, reset the orders, is insanity. I can't believe that majority brokers in our country don't give this very simple, very important feature and charge crazy brokerage on top of that. Like, it's absolutely, it's like, it's theft, I would say. It just makes me so angry, but it's the reality. It's how things work. JP Power. Let's take a look at JP Power and wrap this session. I am not bullish on JP Power basis the 75-minute time frame, also basis the weekly time frames, volume activity in this last few candles. Majority of it has technically been consolidation. So the last volume we saw this was again dry. Here, up to here, the uptrend happened consistently with strong volumes, but I see the participation has really reduced in this leg of upside. Also, the daily time frame is also showing a negative divergence. See, last time when it showed a negative divergence, this stock fell almost 20%. See, if you want to make a fresh entry, wait for the stock to come back down at least to 15 rupees. So make a fresh entry somewhere around 15 rupees, but also set a stop loss at the level of 14.35. Okay, because if the stock triggers this level of 14.35, then I really believe it can come back down to the 500 EMA, which is around the level of 12 rupees 75 paisa. So that is where you can again re-enter the stock. So that's a strategy which you should exercise in this. And that's it. I completely lost track of time on this session, and I had a lot of fun sharing my insights. I hope I was able to add some value to you. I will see you again on Friday in my Market Outlook series, where I discuss in details Nifty, Bank Nifty, and the intersector charts, because we always want to know where the momentum is headed so that we can allocate our capital in that sector. Thank you for being an amazing audience and giving me your time and attention. Don't forget to like this live stream before you leave. I will see you on Friday. Namaste.